Hello and welcome to Fundamental Value, a journey to quantify crypto. I'm your host, Joshua Frank, co-founder and CEO of The Tie. On Fundamental Value, we speak with the leading hedge funds, analysts, trading venues, and digital asset market participants. Our goal is simple: to understand how the leading minds in the cryptocurrency space are researching, analyzing, and quantifying the value of digital assets. Remember that you can always catch this podcast and other deep explorations of blockchain trends on Cointelegraph magazine at www.cointelegraph.com/magazine. And a very quick disclaimer before we begin: nothing we say here is an investment advice, and you can view our show notes for complete disclosures. And with that said, I am very excited to be joined by Phil Bonello, who is the Director of Research at Grayscale. Phil, it's so great to have you on.
Thanks a lot, Joshua. It's great to be on.
And so, the way we like to start every episode is by asking, your origin story, right? What was, your pre-crypto life like, if you can even remember back to that? And, how did you end up, finding yourself eventually falling down the rabbit hole?
Yeah. So I studied industrial engineering at the University of Michigan. From there, I went to IBM, kind of did strategy consulting in the tech space, especially for industrial, like Internet of Things. So I was interested in predictive maintenance systems. So like basically predicting when large industrial systems machines were going to go down. And so I started to look for new jobs like after IBM, and somehow like on some message board, I saw something about Ethereum. I was like, oh my God, like this is how autonomous communication between machines is going to happen in the future. And like my mind just kind of started spinning, and I just like kind of couldn't forget about it.
Had you heard about Bitcoin before then?
I'd heard about Bitcoin, but I like didn't really think much of it until I saw Ethereum. So, Ethereum was really my entry point.
And so, why did you decide, to actually go full time into crypto? What was like, was it just like you saw this thing about Ethereum and you're like, I need to hop in full time? And why the research analyst angle? Why was that the first, direction that you kind of went?
Yeah. So, I went through kind of 2016, 2017, and things just got so crazy. I was trying to make sense of what was going on. Like, what was the value of Bitcoin versus the value of Ethereum versus the value of all of these ICOs? And so I was really approaching everything from the perspective of how do you value this stuff? And I think like the analyst mindset just kind of suited me. Like I was just asking why and trying to dig in. And so I decided in 2018 that I just wanted to go full time. I felt like that was the only way that I could really answer some of these questions and dig in and approach things from first principles, I guess. And so that's what I did. I left my full time job in 2018 and just spent the next pretty much like 6 to 8 months doing a lot of reading and writing. I wrote a couple papers on valuation, so like a valuation taxonomy for all the different ways that you can value different cryptos at the time. I wrote like a paper on trying to value governance. The only governance token that I think I knew at the time was ZRX, and they had just come out with that proposal. So yeah, it was just an exploration into why these things were valuable. And it was really interesting.
And so your theses from there in terms of valuation, what were your main theses, and how has it actually played out in reality? What do you think you're right about? And is there anything that you were just totally missed the boat on?
Yeah, I think, well, one of the things I was right about was the value of like productive assets. So the big thing is that I categorize things into like non-productive world and productive. And so I think in like the non-productive world, you basically have like NFTs or like artwork and like Bitcoin and money, right? And then in the productive world, you have cash flow generating assets, which we've really started to see a lot more of in the last year. And I think what I was wrong about it is at the time I was approaching things from like everything has to follow fundamental value, right? Like, and just basing too much of my thinking on fundamental value alone. And I think fundamental value is important, but it's part of a story, right? And fundamental value is just a very convincing part of the story that a lot of people converge upon. So yeah, I think I started to learn that throughout the cycles, that you can't just fall back on quote unquote fundamental value or like, your cash flow analysis. But it's been really exciting to see in the last couple of years this transition to like kind of cash flow generating assets. Um,
And
yeah.
so when you say story, right? What do you mean by that? Like what is the full story around an asset, right? How do you see these assets accruing value?
Yeah, I mean the story is so broad, right? It's just it's the people who are part of a community. It is all the different metrics. It's the cash flows associated with them. It's the way that they're traded. It's the volume. All of that comes together to tell this story about an asset, which then ends up being reflected in the price of that asset, right? And so I feel like this is sort of like late stage bull market commentary to say like, oh yeah, it's all about the story. But I truly believe that, and that's not to say that fundamentals don't matter. Fundamentals matter, but they're part of the story in my mind.
Yeah, I'm excited to dive into that in a little bit. And so, let's take one step back first, and then we'll take two steps forward again. But so you spent over a year at Ikigai, which is a crypto hedge fund based in Los Angeles, as one of the first employees and as head of research. And can you tell us what it's like, to I mean, I guess broadly be part of a hedge fund that's just getting started, but also being part of a hedge fund in a bear market, right? And in a market where now we hear about crypto funds. I mean, you're at Grayscale. Grayscale's got 40 billion or whatever ridiculous amount in AUM, right? I'm sure at Ikigai you guys were nowhere near that, right? And I mean, for crypto funds back when you guys were getting started, raising $5 million was hard, right? I mean, now people are raising 500, but even getting to $5 or $10 is a challenge. And so I'm curious to hear like what that was like, what the process was like. Were you doing research internally for the company? Was it externally for prospective investors? Like, just kind of hearing your journey there.
Sure, yeah. It was kind of a wild journey. It was a lot of fun. It was really challenging. I learned a lot about what's important in the formation and the fundraising in hedge funds, especially in crypto, and like what's important to get them off the ground and how to really sell the product, right? Um, we really started to get moving on building the hedge fund in July and August of 2018, and then in November, you might remember the market crashed from like Bitcoin crashed from like 6,000 to 3,000, and then we launched the fund in December. So it was like a really difficult time to be launching a fund because investors were just they're like, oh, I thought that Bitcoin was dead. It seems like it's dead. Like I think it's going to maybe go down to 1,000, maybe 500. Um, so it was a lot of just trying to find opportunities, trying to stay alive, trying to squeak out any alpha that you could find out there. And then on the fundraising side, that was definitely a big challenge. So like being able to tell a really convincing story about the product, about the investment product that you're building, and doing a lot of digging through different metrics and where you can actually kind of understand how the cycle is happening. And I think through that process, I gained a really great appreciation over a few things. Like one of the things was this using on-chain metrics and like kind of macro indicators sort of to understand what part of the cycle that you might be in. And then from that point of view, you can then dig into like more micro factors so that you're not spinning your wheels on micro analysis when really you're going to be fighting against the macro trend the whole time. Yeah, so really interesting, really difficult. I just talked about the cash flow generating assets and like going through all those assets. I went through like the top 250 assets by market cap, put together a whole investment framework. We probably had like 15 different factors that I scored to kind of build out this like quantitative model, so to speak. But so many of these assets at the time had no user traction. They barely had a product, and even if they did have a product, the asset in many cases wasn't tied to the actual use of the product.
Right, 100%.
Yeah, so interesting time.
Yeah, I mean, I'm curious. Out of the 250, I mean, how many are actually in the top 100, even, or the top 250 still, right? And how many of those projects have users today, right? And I'm sure the number is very, very low.
Yeah, it's definitely low, and for good reason. I'm really glad to see that there's been churn.
And so, the next step on your journey where you currently are is Grayscale. And so I'm curious to know, obviously there's clear reasons why you'd want to join Grayscale, right? It's, but I'll let you answer that question, right? What drove you to Grayscale? And what is your job now as the director of research at Grayscale?
Yeah, absolutely.
And also, what is Grayscale for anyone listening who may or may not know?
Sure. That's a good place to start too. Yeah, so Grayscale is a digital asset manager. We currently have 14 products, 13 of which are passive single asset vehicles. And then one of which is an index product, market cap weighted index. Of I think right now it's top five by market cap. Grayscale really tries to be the bridge between kind of the traditional world and the digital currency world. We package all of these products as traditional securities, so that just makes it easy for investors to invest in crypto. So then, like to hop to why I was really interested in joining Grayscale, I really felt after my time at Ikigai and looking through all these assets that the next leg in the crypto's journey was institutional adoption, and institutional adoption specifically with respect to Bitcoin. We frequently would say the world is ready for Bitcoin and Bitcoin is ready for the world. I looked at all these scaling problems and all of these technical issues on other chains and with different products. I was just like, I'm not sure when these are going to get solved. Like the Oracle problem was a big one that I just felt was really, really difficult. And so I was really focused on Bitcoin at the time and really thought that institutions were going to adopt it. So I wanted to be part of that adoption. I wanted to help educate institutional clients on what Bitcoin and digital assets really are.
And so, can you kind of give us a little bit of a background on, hey, how Grayscale got started, and where the firm is today, and what the future looks like, for the company?
Yeah, so I don't want to speak too much for like Barry, but Barry had started Second Market. It was kind of tangential to like where crypto is today, in that you could sell shares in private shares in startups. Um, second Market, it kind of makes sense. And then Barry's, I think, always had this vision of building a new set of financial services for this new financial system, right? And so, like, we have this new asset class. You need a prime broker. You need an asset manager. You need new exchanges. And you can kind of see that in the DCG portfolio, right? So, like, there's Genesis as the prime broker. There's Grayscale as the asset manager. There's Foundry as the primary financier for kind of mining businesses. Investment in Luno as like the biggest one of the biggest non-US exchanges, and then CoinDesk, right? So I think his vision is really, and it still holds true today, is building this whole system of financial services for this new asset class. As far as like where Grayscale is going today, like we really view ourselves as one of the premier asset managers in the space, and want to position ourselves like kind of according to the traditional world. So like you might think of something like a Vanguard or a BlackRock, and I think that's really kind of what we're modeling our business as. And so continue to bring innovative products to the market that institutional investors and really the masses are demanding, but that they currently can't have access to, or maybe don't want to have access to, like in the underlying form. It's still kind of clunky, a little scary to just hold kind of spot underlying of these assets.
And so, at this point, the products are all passive management. Do you see demand for actively managed products? I mean, a la maybe Cathie Wood and ARK Invest. Is that something that you're seeing? And funny enough, ARK Invest was, the first institution to ever hold GBTC, which is credit to Chris Berniski back in, I think, 2016 or 17. And so,
Yeah.
Are you seeing demand for, active managed products? And do you think if you are, those would behave similarly, to the current products you have, being OTC?
Yeah, so I think there is demand for potentially active products for maybe just more tailored products, so different sort of indices and things of that sort. What's interesting is, the crypto industry as a whole has matured so much that there actually are sectors at this point. That wasn't the case a few years ago. You really couldn't do sector analysis. So I think Grayscale as a whole wants to continue to bring products to market that make it simple for the common investor to get exposure to crypto.
And are you seeing, this is something I'm always curious about, and I've actually had a bunch of conversations recently on the RIA side. Are you guys starting to see an uptick in interest from, investment advisors as well? And I'm kind of, I guess, curious, broadly speaking, where the demand comes, both in the private placement side on Grayscale and how that's changed over time, but also, on terms of the, now that, once the private placement is done, it becomes traded 6 or 12 months later, where that demand is coming in, if investment advisors are fitting into that.
Yeah, I think we're seeing a huge uptick in the RIA side of things. And I think that's just because of the bull market, right? Like clients are demanding that their advisors kind of get them into these products. From like what type of clients have been coming to us in the past year, it's been 90% institutional type clients, mostly Bitcoin. Like I think it's been around 90% inflow for Bitcoin relative to other products. I think that's largely been driven by kind of the monetary inflation narrative that like really resonated with a lot of institutions. We are certainly starting to see, or like have seen, an uptick in Ethereum and some of the other products down market cap. But just from like a big money perspective, like people are still just getting familiar with Bitcoin, right? So, like I think we're starting to see maybe some interest in like DeFi, because it's sort of familiar. Those products are sort of familiar. They have cash flows associated with them, and so yeah, like people are starting to poke around in the DeFi space, but it's been very, very heavy on Bitcoin.
And are the types of institutions that are working with you, have those changed significantly over the last year or so? I presume when GBTC was first released, you're talking high net worth and maybe family offices, right? It would be my presumption, and you can correct me if I'm wrong. Has the type of institution changed from, a family office, let's say an endowment or a pension? I mean, are the types of clientele different?
Yeah, definitely. And yeah, it's largely been family offices and hedge funds, for a lot of the inflows. But we have seen some interest from like more of those endowment types, like larger asset managers that are traditionally much more conservative.
And so, can you kind of talk about, and I know, you may not want to hit on this, in depth, but the ETF, right? And the seemingly endless process. And I believe, Barry has come out and said that Grayscale will, eventually, hopefully get an ETF. I'm curious to your thoughts as to, maybe not, you don't need to tell us what's going on behind the scenes or anything like that, but do you think, the market is closer to an ETF than it's ever been? Do you think there's work that's still needed? And what do you think regulators remain concerned about, that potentially is keeping them from approving an ETF?
Yeah. So there's certainly demand for an ETF. I mean, we see that in the Grayscale products, certainly. We've been, really looking towards regulators to see like how things have been progressing and communicating with them constantly, right? And like you mentioned, I think it was last week or the week before, Grayscale released a comment saying that we intend to transition GBTC into an ETF when the time is right. I think one of the biggest sticking points for regulators has been this idea of market manipulation. One of the things that I view as potentially positive is just the increase in CME volume. So we'll see if that makes a difference. But yeah, I think it's just an ongoing process. I do probably think we're closer than we ever have been, just because the crypto space is more mature than it ever has been. but yeah, it's an ongoing process. Gensler was, I think, just admitted today. So yeah,
The fun begins.
the fun begins.
And so let's dive into research and fundamentals. And so I'm curious, obviously you didn't start with the traditional financial background, but I'm sure a lot of folks at Grayscale have, and Barry obviously did. And so, I'm curious, what research techniques have you kind of adopted from traditional financial markets? And what do you think is kind of more crypto native or had to be adapted for the crypto market?
Yeah, so I think the biggest one is like cash flows, right? Like being able to model stuff like using a discounted cash flow model. And for a long time, you really couldn't do that. So like even though I didn't come from like a traditional finance background, I actually did take that approach when I started doing full-time research, right? Really came from like, okay, how can I model this from a fundamental perspective? How can even if the cash flows weren't direct, like can I model indirect cash flows or some sort of value, right? For a governance token, for example, like how much does that governance token actually control? How much value does it control? But I think during like my time at Ikigai, things changed a lot, and like the way that I viewed the space really evolved. One of the things that I found that I really connected with Travis on, is this idea of like you can't fall in love with any of this stuff, right? And I think I heard him on the Crypto Bobby podcast like back in 2018, and he's like, you can't fall in love with any of this shit, Bobby, and that really resonated with me, because like you want to be cognizant of the crowd, and like you have to observe the crowd, but you don't want to become part of the crowd. You may want to invest in the crowd, but you don't want to get sucked in, because like once you like kind of fall in love with a project, you then can become just very, very biased and end up certainly getting hurt like in a bear market, right? And I think we saw a lot of that in 2018, 2019. In building out the investment framework, I was looking at all sorts of metrics, like whether they were more like from a like market perspective, like volume and price and time, or more like on-chain metrics. So I'm a big fan of using on-chain metrics for, like I said, like more macro indicators. So trying to get an understanding of where supply, or like in what asset supply might be constrained, and then just trying to understand if demand is coming from like more of a fundamental
And by
perspective.
supply constraints, do you mean like supply off exchange? Like, what are the metrics you actually like looking into?
Yeah, so one of the metrics that I use frequently is looking at the age of coins. So like for Bitcoin, for example, like I will take, I created this metric called like the holder speculator index. And so holders are basically the supply of coins that have not moved for 1 to 3 years, right? So you're filtering out any coins that probably were lost, never to be touched again. But you're also like you're filtering out those like short-term coins, right? Anything less than a year. And so you want to see that steadily increasing. And then I have the speculators really labeled as like 90-day short-term active supply, right? And so like they tend to be very interrelated and cyclical, but like from a macro standpoint, you really want to see the speculators go away. The short-term market participants are all gone. They really don't care to play in the Bitcoin market anymore. And the holders have that 1 to 3 year tier is so powerful because if we just refer back to the market 8 months ago, you can look at that holder base and you're like, okay, those 1 to 3 year holders have gone through crazy volatility, right? They've seen 3,000, and then they've seen 14,000, and then they saw 3,000 again, and they haven't sold. So like you've got to assume that they're going to at least hold back until it's 14,000, right? So it just like it gives you a level of comfort that the market participants currently present are really there for long-term price appreciation. So that's one that I.
How are you seeing that metric take shape now in the market?
Yeah, so we're starting to see some movement from like the long-term holding tier, and we're definitely starting to see an uptick in kind of the short-term speculative tier. I think one
And what's the time frame for that? Like, is this over the last few weeks? Is this over the last few months? Has that changed since the beginning of the year?
Yeah, it's been mostly in like the last 3 months. There's been a shift a little bit. So there aren't just like crazy amount of speculators in the market yet, but we're starting to see that trend shift a little bit.
And how are you seeing that for altcoins? Are you seeing it be more speculative? Because I mean, if we look at the market, I mean, alts have absolutely destroyed this, over the last 6 months, right? I mean, I think, what I've seen constantly play out, and I'm curious if you've seen the same thing, is you basically get this market, Bitcoin moves up by like 15%, it stops moving, and then altcoins go up by 150%, right? And then when Bitcoin's crashing, you want to be the furthest away from an altcoin historically, but it seems like that keeps happening, right? I mean, if we look at exchange tokens, I think I looked today, the average exchange token is up like 1,250% year to date, which is just, it's obscene. Like, it's completely ridiculous, right? I mean, BNB is up from like 20 to like $600, right? And so I'm curious if you're seeing the same thing in alts, if you think this is long-term holding, or if you think it's more speculative behavior.
Yeah, from a macro perspective, it's a little bit, it's more difficult to do on the altcoins, right? Because I'm looking at like multi-year holding periods, and
right. Some of this stuff, popped up last week. So
yeah, and some of these coins are they're not that old, so you can't see those historical like holding patterns. Yeah, but I mean, I think some of the activity right now is definitely on a speculative side, but that can run for a long time, as we know.
And so I'm curious what other on-chain metrics, you're really interested in, both for Bitcoin, but also, we can keep this to the Grayscale assets if you want, like, Ethereum and Ethereum Classic and Litecoin and LivePeer and Horizon and all these other assets that Grayscale, makes available. I'm curious as to what metrics you'd like to look at there when you're, potentially talking to investors about, looking at these assets and valuing them.
Yeah, for sure. So I published this piece called like Valuing Ethereum maybe 2 months ago or something, and it walked through a number of different metrics for Ethereum. One that I think is like fairly convincing is like the price to sales ratio, right? Like, or just looking at the amount of revenue that's generated on Ethereum relative to its price at any given time. And I think that's convincing because at the end of the day, Ether is used to pay for all of these transaction fees, right? And so if there's a huge amount of transaction fees on the Ethereum network, then you might assume that there's going to be a large amount of demand for Ether as the underlying asset. And so if we look at like kind of the historical trends, that's still at a very low level, or at least last I checked, because Ether really hadn't made its move yet, and the fees have just been insane on Ethereum. So like I will say though that that's like a highly reflexive metric, and fees, sometimes follow price. And a lot of the altcoin movement, I think, has really been driving some of the fees on Ethereum, right? So like if the market
speculators on Uniswap and
it's all inherently financial. So like when like you look at like total value locked, and great, like total value locked is one thing, but it's made a lot of that value locked is made out of highly volatile assets, and so you can derive a cash flow from TVL, but like that cash flow might evaporate when TVL evaporates because the underlying asset has just gone down 80%.
And so how do you, thinking of price to sales, I mean, what do you think of the new, the new Ethereum improvement proposal, which is out, which will reduce fees and also, moving to proof of stake and all these, different things that Ethereum is working on, because, it's clear that if Ethereum wants to reduce fees, they can, if miners and the like agree to it. So I'm curious to how that could impact the value of Ethereum.
Yeah, no, I really like that triple point thesis, which basically states that like Ethereum right now is kind of this commodity. It's kind of a money commodity sort of asset, which makes a lot of sense to me. It's used to pay for fees, but the fees aren't burned. But then with EIP 1559, it becomes this consumable commodity, right? Like you pay for a transaction, some amount of ether gets burned, and that eventually reduces the total amount of ether in circulation. And then under a proof of stake type paradigm, it then becomes this like cash flow generating asset while also having this deflationary mechanism. So it's like it's really interesting, right? I think generally it's good for the transformation of ether, but that also scares investors. Like it's going to scare institutional investors. When I talk to an investor, and they're like, what should I invest in, like Bitcoin or Ethereum? And like they're like, I really want to hold this for 10 to 20 years. And I'm like, well, you know what? Bitcoin is like pretty ossified at this point. Like it's hardened. It's not going to change that much just because like what the community is like. You can feel pretty comfortable that the Bitcoin that you have in 10 to 20 years is going to be the Bitcoin that you bought today. Whereas, Ethereum, like you really don't know what's going to happen in the next 5 to 10 years.
I mean, it's crazy. Ethereum has been the second asset by market cap effectively since launch, right? And it's, right behind Bitcoin, but Bitcoin is just like, there's still questions with Ethereum right now. I'd love to dive into, the Solana, the Avalanche, all these new, I mean, even some of these newer blockchains like Near Protocol and, some that haven't even launched yet, right? Like I'd love to dive into that, but it's kind of crazy that like Ethereum does have the most devs. It has all this stuff going on, but it doesn't feel as safe as Bitcoin, and it can change so much. So, I mean, I don't know if you share that kind of point of view, but
no, 100% I share that. It's Bitcoin has the brand. It's been around the longest, and just the core values of the community are really such that like it's not going to change too much, right? Yeah.
So when you get, and I'm sure you get this question a lot, right? When I talk to family offices and endowments and folks that are, and even retail, right, or high net worth, that aren't really exposed to crypto, they say, what about the other Bitcoins, right? And like it's very easy to give the value proposition of Bitcoin, right? It's very easy to explain. It's the store of value macro asset. Like we finally landed on, like we went in so many circles, right? First it was Roger Ver who was running around, trying to convince everybody to accept Bitcoin as cash, and the narrative's changed over time. But we've landed on the store of value thing, and I don't think anybody in the space will really disagree with it. But with other assets, it's like, what is the value, right? And why should you hold it? And why is it different than something else? And so I'm curious to when, I'm sure you get similar questions to that, maybe not exactly the same, how you respond to an investor that's potentially interested in these other assets, but doesn't really understand them.
Other assets, meaning like
anything, all coins, anything.
Okay. I was wondering if you were, talking specifically of like BSV and stuff like that.
No. Like we don't talk about BSV on the podcast. Don't worry.
That's good to know. Yeah, no, I think as long as there's a defined use case, then you can really speak to something like pretty easily. Like right, so like for example, we just launched products for BAT, which has a Brave browser is kind of the company behind BAT. They have 25 million monthly active users, like real traction there. They're probably going to be building out a DEX that integrates or like a DEX aggregator right into the browser. Like there's LivePeer, which is a video transcoding service. If you want to really build a decentralized video application, then you're going to need that full stack, and there's no other service to do that in a decentralized way. Same with Chainlink. Like I don't want to just talk the book here, but like it's an Oracle service that's the most adopted Oracle, like kind of in DeFi. And so I think like as long as there's a defined use case for some of these alternative assets, I think it's pretty self-explanatory. Like it is a little bit more challenging with things that are like very similar to Bitcoin, right? Because like
let's take Litecoin for example, and Grayscale has a Litecoin trust. So I'm curious, as to the research that you're putting out there around Litecoin and why one would want to take a position over Bitcoin.
Yeah, I think that Litecoin has some defining characteristics. Like one of the things is that it has historically kind of been a test net for Bitcoin. If I'm not mistaken, I think Litecoin is experimenting with Mimblewimble pretty soon. So like that, there are different things there, and community is obviously a big part of all these assets. And so if one really believes in the Litecoin community, then it may be a better asset to own than Bitcoin. Obviously, the total market capitalization of Litecoin is a fraction of Bitcoin's as well, and so like there's obviously a trade there. You know, all from an expected value perspective. Like if you place Litecoin at a 10% chance of overcoming Bitcoin, but it's only valued at 2%, then there might be a trade there to close that gap.
And so I'm curious as to, I think, I mean, you just alluded to it, is this idea of relative valuation, right? X is worth something, so Y should be worth something else, right?
Mm-hmm.
And so I'm curious, is that something that just matters in bull markets? Does that matter in bear markets too? I mean, I'm seeing that a lot with our clients talking to funds. I mean, that seems to be a trade that everyone's making. It's like, okay, this creator coin just pumped, this one hasn't pumped yet. So I'm curious if you're like seeing, the same kind of thing, and if that is going to end up hurting people once this market, it will correct at some point, right? I mean, I think we all know that. So, whenever it will, is up for debate. But like, if relative valuation is dangerous in bull markets, or if it's dangerous in bear markets.
I think it's one part of the story, like I was talking about earlier. But that's for relative value to work, other people have to believe in relative value, right? And so, and like other people have to like see that trade there and actually be part of the closing of that gap. So it's something that I don't think with any of these things you can look at them in isolation and depend on them like completely, right? Like strong opinions loosely held in this market for sure. And so you might see a great relative value trade, but if the thesis doesn't work out, then you just have to cut it. So like I definitely see some value in it, and it can work, but just something to be cautious of.
And so, we've obviously, as I mentioned, exchange tokens are up 1,250% this year, right? I mean, Bitcoin is at 62,061. Who knows? I don't know. It changes every 5 seconds. But do you think the market is a little too hot? Did this happen too fast? And, are we straying away from reality with large cap, mid cap, small cap tokens? Or do you think this is just the beginning of this next cycle? I mean, earlier you actually said late stage bull market, so you kind of, I don't know if you threw that out on purpose or not, but curious to hear your thoughts.
Um, I it's really hard in crypto to like call tops. We don't generally speak to like price predictions anyway, but I would say this: like late in a bull market, even if things are overheated and the community is euphoric, prices can run another 500%, and the level that you're currently at could be the low of the next bear market, right? You just it's so hard to call that. And that's why I really like to look at on-chain metrics, just to understand kind of the general movement of these assets. Um, I was going to say earlier, even with the holder speculator index shifting a little bit, one of the things that's one of the caveats there is that a lot of money has been going from I would say a lot of that like holder base has been going to new holder types, right? Whether it's like the Grayscale Bitcoin product, or whether it's like into right into Coinbase, right, from an institutional player. And these a lot of these institutions really aren't looking for like a 6-month holding period. It's a much longer position for them, and it's a very small percentage of their portfolio. And so there's a potential that even though we see that holder base dropping a bit, it might be going from one holder like kind of a new type of holder.
And so, speaking of Coinbase, Coinbase had its IPO today, and I'm curious to get your initial thoughts. But one thing that actually came to me earlier today, and I wanted to ask you is, you know, who is the buyer? Do you think of the Coinbase IPO? Do you think it's people in crypto, or do you think it's new folks? And does that mean that those that are selling their Coinbase shares, in my head, I'm like, are these guys just going to ape into DeFi? Right? Like, I think something like 18,000 or 19 or 1,800 employees got, a couple hundred shares, which is, I got $25,000 at the 250, at the $250 price, which is now even more. So I'm curious as to what impact you think that's going to have on the market broadly.
I think it just serves as a pricing benchmark for a lot of things in crypto. We of course saw like a lot of the exchange tokens being repriced in real time too. Like when Coinbase is really on its run earlier today, and I think it went from the 250 like pre-market price to then I think it was around 380. Like when it
went all the way up to 400 at some point, or very close.
Yeah, 380 when it started trading, and then at 450 when at its peak, and then right back down to like 330 or something. We saw a lot of those exchange tokens really moving in lockstep. I don't think that the buyers of Coinbase are crypto people because they already feel comfortable, buying that like coins. And I think a lot of people were really looking at coins as kind of relative value trades to Coinbase. I think it's more institutional folks who have had trouble making allocations to Bitcoin and crypto, more broadly, like the people who have been, maybe buying like a Grayscale product or have been buying like something like MicroStrategy, kind of going into Coinbase. And then that last part, the narrative of people selling their Coinbase shares and then getting into DeFi, I really don't know. I mean, I think that it sort of seems like a stretch, but it's definitely possible.
Yeah, no, it's interesting. I mean, do you think that this has any impact on a crypto ETF, or do you think it's totally separate?
It feels separate to me. Yeah, I don't have too much to say there, but it feels like it's a little bit isolated.
And so, my next question is, and we've talked about fundamentals a bit, but I'm curious to hear your definition of token economics and whether or not, we talked about fundamental value, but whether or not you think the market is actually valuing that today. And that's something that matters.
Yeah, token economics for me it's like how the token is actually structured. And in 2017, 2018, like all of those tokens were what I would classify as like medium of exchange tokens, right? They're just being used to pay for the service of the product.
You mean utility tokens in a way?
Utility tokens, yeah. I don't see like a ton of value in those tokens generally. I don't think like the value of them is tied so much to the actual product. So I think of token economics is like, is there a way to actually fundamentally value something? Maybe there's some sort of burn associated with it. Maybe there's a lockup. There's some staking mechanic that's going to act as a supply sink. I think that definitely does have a very strong effect on how the market prices these assets. And in some cases, it can really, really constrain supply. And if the demand is there for the token, then just that like offsetting supply is going to result in price appreciation. So I definitely think there's value in understanding the token economics.
And so two things you brought up. The first was locking and the second was staking, and lockup, sorry, and the second is staking. And so one thing that I feel like I'm like the only person that cares about anymore is fully diluted value. It seems like that has become totally lost on the market, right? Which is the idea that in some cases, certain assets only have 1% or less than 1% of their supply that's currently liquid or available for trading. I mean, a couple examples of this just off the top of my head is Serum, which is the DEX on Solana. is trading at like a 60 or more, 70 or $80 billion fully diluted valuation, which is insane because I've interacted on Solana, and I have to imagine I'm one of 10,000 people in the world that's actually interacted on Solana. Like, it can't be that many people, right? And so, you know, I'm curious at, and another example is Flow, the Dapper Labs token. Another example is Filecoin was trading at like a $250 billion fully diluted valuation. And so, does that even matter? Like, it doesn't seem like the market cares. I mean, with Avalanche, there was this thing, they called it the bullish unlock. It was bullish somehow that more Avalanche came onto the market. So I'm just curious as to your overall take, both short term and long term.
Again, if you're the only one that cares about fully diluted value, then it's not then fully diluted value is an irrelevant metric for the market, right?
Do you care about fully diluted value?
Do I? Um, I I don't really care about fully diluted value unless it's coming up, like the unlocks are coming up like imminently, because I think so much can change in what happens like with that, with the rest of that supply. Maybe it just continues to get pushed back, maybe it gets burned, whatever it may be, and then for as long as something is trading, you're trading on this idea that you really have no control over, and that the market, like you said, the market appears not to care. So I think it's probably worthwhile to ignore in the short term. But like again,
That's a hot take. I like it. But it's a hot
again,
take.
you have to be ready to like reevaluate, your thesis. But if nobody is actually looking at fully diluted value and you are, then it's the same thing as a relative value trade. Like, it's just not going to work.
And no, I think that's important. I mean, it's the same thing, right? People ask why Bitcoin has value, and it's because a lot of people believe it has value, right? And so, same thing. Why did technical analysis works? It works because a lot of people think it works, and they do it. So I think that's a good take.
Yeah.
And so the second part of this is staking and inflation, which is also very similar to this FDV idea. Which is the concept of, when it comes to Bitcoin, we're obsessed with the idea of inflation of the US dollar, right? And Bitcoin is this asset that we can hold, and this hedging asset against inflation, but we're aping our money into assets that have, staking yields of 30%. They're inflating by 30 or 40%. And somehow, when it comes to Bitcoin, we love this store of value narrative. But when we look at these other assets, we're obsessed with the yield. And what is your take there? I mean, like, my take is, like, if you're not staking, you're losing, because staking is just making sure you're keeping up with inflation. But I'm curious as to your thoughts.
Well, yeah, and I think it depends on that supply curve, right? Like, I think we saw over the summer some of these DeFi assets they had really generous yields, and the yields were denominated in their tokens, and everybody really loved that until they were staking in and getting tokens that were losing value like on a daily basis, right? And so yeah, so like, I think you just have to be cognizant of that. But I do think there are models out there where inflation of the certain asset actually is a great bootstrapping mechanism, and different locking schemes for those stakers make sure that like there's not going to be a huge burden on token holders. Yeah, but also, like, if you're really bullish on a token, you may not want to be farming to get that token, right? Like, you may want to just buy it. Like, often that's the easier route.
And so, in this bull market where every valuation is seemingly going up, how do you go about finding this elusive 100x, this elusive diamond in the rough? And I know that's not what you do in your job at Grayscale, but I'm assuming that's something that you did, during your time at Ikigai. And also, everybody in the crypto market, regardless of whether or not you work at a fund or you work anywhere else, or regardless of whether you're investing, you're always obsessed with this idea of the 100x trade. And it's funny you mentioned Crypto Bobby and the advice Travis got, because I know he got his first 100x, which he posted about with, I think it was Thorchain,
Yeah.
with Rune. And so I'm curious as to how you do that in a market where everything is already up by 1,000%.
Yeah, I mean, I think it's very difficult in the current market regime to do that. Unfortunately, like it's probably going to come down to like private allocations. Um, but in more of like a bear market situation, really understanding the fundamentals of the token, uh, from the token economic standpoint, from like are there users on chain, uh, all the way to like more of like the qualitative and like kind of fringe stuff. Like I was tracking, if a certain token was followed by a large investor or something, because then I could maybe front run the investment from that large investor into that token, or what was it like? What was the community like for that certain token in Telegram, right? Like, was it a lot of pump and dump type of people, or was it really more investor, long-term oriented people with their development going on? Um, where geographically, where was that token located, right? That might tell me something about the type of investor going in, and
I'm
what.
curious. Can you expand on that?
Yeah, so like I think we've historically seen kind of like a segmentation between like kind of East and West. And so like there are some of the like Silicon Valley darlings versus kind of like more like I would say like the Asian darlings. And are certain investor bases who target each one, right? And so sometimes they will pump together. Um, and so like from a relative value standpoint, you might look at one like Silicon Valley token and be like, okay, well, this one hasn't pumped yet, but it has the same investors. I actually think this might pump. And so like a term we use a lot back, in the Ikigai days is like pumpamentals. Um, just like what were the, qualitative factors that really might feed into how this token will react in the broader market. Um, yeah. And yeah, I'll stop there.
Yeah, and no, I mean you're going down the list. I mean, my next question was how do you due diligence a token, and you've gone through a lot of it. The last piece, that I'm wondering is how much does it matter, who the team is, and do you interact with teams at Grayscale, on all the products that you're launching, and how does that change when you look at, some of these anonymous founder DeFi tokens, and what I guess, I'll let you run with it.
Yeah, and I just want to be clear. Like the way that I just described understanding a 100x token is definitely not how I evaluate tokens like for Grayscale, or how we evaluate tokens for Grayscale generally. Right, like we're really trying to understand if there's market demand, or if we think there will be market demand based on the founders of the project, the market that project is in, and if there's really a market need for it. And those are like really the big factors, right? So like a lot of the tokens that we have listed are just like at the top of the market cap list, and that's just it's simple, right? Like the market has shown us that they want these tokens, and then some of the other ones are a little bit more niche, and that's because like we've looked at the market and we're like, okay, this is an interesting market segment. This token or this project actually fulfills that market segment in a really strong way. And we want to make our investors aware of that and give them the opportunity to invest.
And so, what is your favorite piece of research that you've written? And we can link it in the description so people can kind of check it out. But
yeah, for Grayscale, I've really liked these two pieces, valuing Bitcoin and valuing Ethereum. Like just because the investors have found them to be really valuable. Um, I think the question that we've gotten so much from investors is just how do I value Bitcoin? How do I value Ethereum? Like I don't get it. And I think we do a pretty good job breaking it down. There's just a number of metrics that investors can use to at least feel comfortable when looking at that type of valuation. And then one that I wrote before I joined Grayscale is called the Sovereign Individual Investment Thesis, and I wrote that in 2019, November, like October, November 2019, and it really talked about kind of the rise of like the online economy, digital money, dissident technology, a lot of things that like we saw come to life right after COVID, and I think are really accelerating right now. And so I really like that book, The Sovereign Individual, if you haven't read it. I think it's great.
And so, what worries you most about crypto? What do you think are the biggest risks? And then, what has you most excited?
I think the biggest risk right now is probably just regulatory risk, not from like a long term perspective, but I think that would be a short term. That would in the short term, it would really be a big burden on the growth of crypto, at least in the U.S. Right. I'm extremely excited about crypto right now. I think more than I ever have been, because in 2017, 2018, like that time period, I looked at the market and I was very excited, but I wasn't 100% sure like how everything was going to work out. I look at the market right now and I feel like the cat is really out of the bag. As far as we have DeFi, which has seen like serious adoption. And with respect to DeFi, the biggest issue we have right now is like a bandwidth issue, right? Like it's having trouble scaling, and that's an amazing problem to have, right? That's like when you think about the internet, that was like the big issue, and it took a little time to scale and to like bring the user experience to the point that it needs to get to. But that's a huge deal. And then I'm interested in kind of like the Web3 build out as well. So like DeFi is built on Ethereum. It's like this transfer of value. It's the substrate for value transfer, right? I think we're starting to see the build out of other parts of the stack, and like you can see that with NFTs, huge demand for NFTs. But then people start to question, okay, well, where's the image actually being stored? And so then like Arweave came out like, okay, this Arweave is this great tool for permanent storage, and so NFTs should really be stored on Arweave. And I think we're also going to see a paradigm in the next few years of personal data storage, right? So you're taking your data from one application to the next, which is, I think, really important and really powerful when you think about right now in the current paradigm where all the power accrues for like internet businesses, like when they have a lot of data, right? So what happens when you kind of turn that on its head? So I'm super excited about where we are in the crypto industry right now.
And so, the last question, to you as as you're a Michigan alum, is your thought on why Michigan re-signed John Harbaugh? What the thought process is there, and what is the outlook for next season for Michigan football?
You know what? I've like almost given up on Michigan football at this point. I don't know why they re-signed. I don't know why they re-signed Harbaugh. It didn't make a whole lot of sense to me. It seems like they've been getting good recruits and he just hasn't been able to develop them. I've been saying recently, we're a basketball school. Uh, so that's how we have to rebread. We had a great run this year. Tough loss, but yeah, we're a basketball school now.
Awesome. All right. Well, thank you so much. And where can people find you online?
Twitter, Phil J Bonello is probably the easiest place to find me.
Cool. I'll link that in the description. Thank you, Phil.
Yeah, thanks for having me, Joshua.